Morning everybody, Mike Niemiec here with some early morning grain and oilseed comments for Friday, the 13th of June. Well, it's been a defensive week. We're down in the neighborhood of around 30 cents in the wheat, down around 20 cents in the corn, down 30 cents in the beans. But we're a little bit better in the overnight trade. We're up around 2 to 3 cents in the corn and the wheat, and up around maybe 5 cents in the beans. The market mostly on the defensive in the sense that we had a USDA report this week which was non-bullish, that being the carryout levels being higher than where we were a year ago. And we're also finding out that our crop conditions and our crop progress is pretty much non-threatening at this point in time, and thus we're seeing the liquidation of trade coming from the spec crowd. Today we'll get a commitment trades report. After the close, we're going to surmise that we're going to see the funds now starting to build a net short position in the wheat and in the soybean oil, while they are still net long the corn, beans, and soybean meal. Thus, if we are going to continue on this pace, that being where we are seeing non-threatening weather, crop conditions being good, and the supply and demand tables being non-threatened, we're going to surmise that the wheat positions and the soybean oil positions are going to grow on the net short side, and the people that are still net long the corn, beans, and soybean meal are going to be liquidated and maybe perhaps even get to a net short position. We're also in between right now, maybe perhaps already dialed in these negative connotations of the supply and demand report, the crop production report, and our crop conditions at this point in time, because at the end of the month we're going to come up with a more important report, that being acreage and our quarterly stocks numbers. But once again, if the acreage is there and the stocks are there, and or if we find out that the world competition is still against us, that being price-wise less than us, we're going to find out that our demand pace is going to be somewhat on the waning side versus what we've seen in the past. So theoretically, we're in between two reports. The trade is still net long, maybe trying to get short some commodities, other commodities, and if we have the weather, supply and demand tables being net negative, and the conditions being good for our crops that and around the world, we surmise that rally should still be sold, but we're in between and maybe we're theoretically always ready for a bounce here and there. Those are my comments, not that of ADM or ADMIS. Thank you.